Good morning, everybody. Welcome to the Flow Show, Friday, 20th of September. We've made it through another week.
Oof. Ryan, good morning, everybody. Good morning, Ryan. Did you do something to your microphone? Because it feels like it comes out distorted.
It comes out what, sorry?
A bit distorted, you know. I don't know if the listeners hear the same thing as I do. Static.
Okay. Give me a second.
Crackling, yeah, that's the one.
Crackling, is it? All right, let's have a
Yeah,
look.
crackling.
Give me 1 second. What can I do? How's that?
Give a quick count.
Any better? Can you hear me better?
Much better, much better.
Oh, there we go. I just muted it and unmuted it. There we go. It's fix the problem.
That's IT for you, mate.
There you go. Switch it off and on again. The ultimate IT fix. Good stuff. I'm glad you can hear me clearly. Right, let's get on with it, eh? Oh, knackered. Right, let's go. Here's a headline for you. Apparently, the Chinese yuan is on a high because of rising stimulus hopes. Not a headline you would associate with a currency strengthening, i.e. easing by a country. Usually it's the other way. Don't ask me where they got that headline from. That's the Nikkei with that. It's not, I dare say it's not had much effect on the price. What has happened though, and if you tie that story together, we had the loan prime rate announcement today, and both rates were kept unchanged in the 1 year and the 5 year. So as much as stimulus has been expected, none has appeared from that rate setting anyway. And that move that we saw lower today kicked off right around when that rate cut came into effect. So part of this move, I think, is them keeping rates unchanged instead of easing them. They've been talking about easing rates further. They've been tinkering with mortgage rates and stimulus and that sort of thing. They're still not going for big, broad rate cutting cycle. Okay, they have cut the RRR previously. And if you remember, one of the PBOC bods said that RRR cut was still filtering through, but they wouldn't rule out doing another one. So until they do something like that, they're still just trying to mess around the edges and not go with wholesale big cutting programs. But I think potentially the risk might be rising that all these little measures don't seem to be doing a lot, and maybe at some point they'll bring out the big guns. Even so, we've seen a move lower in dollar China, which pretty much has gone against the grain and what we're seeing elsewhere, particularly what's happening in the yen, as Kay pointed out. But the dollar is still a bit on the back foot in a lot of pairs. So maybe this is part and parcel of it. I'm nudging into some small longs, still happy to play longs down into the big 7 area. So I don't agree that more stimulus means that the one should strengthen, but I'm not market, so I know where my level's at. I'm still looking at 7s down there, and if we go through 7s, it will change the picture. So that's my thoughts on that. Anyway, what is a bit concerning for my trade, particularly, is that they fixed the reference rate at 7.0644 today, which was down a big chunk from 7.0983. So there's indications that they are happy to let this go lower a bit. So that is a bit of a cautionary note for me and anyone else who's going long down here. We are still lacking some real comments on the currency. So if the PBOC ever come out and say they're happy to let the yuan strengthen for a while, I'm going to fold my longs as quick as I can hit the button and see where it wants to go from there. Kay, you got any thoughts on China at the moment?
Yeah, yeah. As I was saying in the room as well, it all looks a tad strange. Okay, we see barring the yen, some dollar weakness, barring yen and Swiss, some dollar weakness still. Yeah, I mean, it's probably got to do with those rates, kept rates still. They're probably happy as well to that there's less bit less stress in the U1, so they're taking advantage of it or fixing it lower. But as you say, I don't see anything in particular that should be supportive U1 right now because it seems to me like I don't think I haven't seen any flows numbers, but I don't think that investors are starting to pile into the to China yet, thinking that they've done enough. So I'm really reluctant to follow this move. Where I do find the risk is just on the price action, Ryan, is that we potentially we'll see a bit of a washout under 7, and that may be a false break, and then we start to go the other way around again. I've let mine go that I had from 7/10s. Just I mean, it didn't cost anything virtually, but I just didn't feel like holding it. So yeah, and it also stopped because it followed the dollar yen for a while. It also stopped following the dollar yen, and all that may hint that there may be a bit more weakness to come before we start to reverse again. But I do think that they still are potentially going to cut rates, and if they want to go back on the international commerce front, hike their exports again, they should, in theory, not let the yuan strengthen too much either.
Yeah, that was my thinking as well. You know, if we are still seeing a bit of a move away from people buying from China, trading with China. So one thing they can counter that with is making their goods cheaper and cheaper by obviously weakening the currency. So the fact they're not doing that, I don't know. The geopolitics as well is a bit of an unknown how they're going to play that too. So there's a lot of risks around trading this one, but yeah, like you, I'm not going with any big trade sizes here, little bits, and see what happens. Keep the risk low, and if it goes wrong, it will go wrong in a controlled manner as far as my account's concerned. So we shall see what happens with that. Right, over in Japan, we started off, it's BOJ day, obviously. We started off with some data, if I can find it, and national CPI, which has risen for the 4th month in a row. CPI up to 3% year on year from 2.8. One of the cores up at 2.8 from 2.7. Another one of the cores up ex fresh food and energy up at 2% versus 1.9 previously. So moving in the right direction for the Bank of Japan. Now they kept rates unchanged as expected, and overall I was certainly thinking we might get something a bit more hawkish, just to keep the momentum going. And the statement that came with the BOJ pointed in that direction, that at least things were going well. They said Japanese economy is recovering moderately, albeit with some weakness. Inflation expectations had heightened or are heightening moderately. It says inflation is likely to be at a level generally consistent with the BOJ's price target in the second half of our 3-year projection through fiscal 2026. Japan's economy is likely to achieve growth above potential. Then said we must be vigilant on the impact of financials, or vigilant to the impact of financial FX market moves on the economy and prices. The impact of FX volatility in prices has become bigger than in the past. So the statement was all, yeah, we're on the path, we're all going, but then Ueda was a bit more cautionary, I think. He said we will keep adjusting the degree of easing if our economic and price outlook is to be realised. He said upside inflation risks have eased. There is some time to make a decision on monetary policy because upside price risks have decreased given recent FX moves. He says the risks of an inflation overshoot have diminished to some extent. And he said wage hikes are expected to continue at next spring's wage talks. Then he went a bit the other way, saying recent data confirmed the economy was moving in line with our outlook. but he said the major driver of upcoming policy management is how our confidence about the realisation of the inflation target would rise. So, bit of fence sitting, bit cautionary, something that Tamura warned against, that they might be getting too cautious. Yen's weakened on the back of it. Kay, your thoughts too?
I think Ueda has actually not helped the yen at all today. Yeah, he kind of went both sides. Still they're still on a hiking path, but there's a couple of things actually. He did acknowledge that yen moves may weigh on inflation or inflation expectations, and then also pointing at uncertainty abroad. And what really killed it at the end of his press conference was like saying like the current uncertainty wouldn't lead to a quick decision on a hike. And then he also said Japan interest rate is probably still lower than the neutral rate despite 2 rate hikes. Now, okay, I know you can read it in 2 ways, but saying that it's probably still lower than the neutral rate despite 2 rate hikes means that, and if you translate it into market, saying that we may not be far away from the neutral rate, which is extremely surprising from somebody who is on a rate hike path. That if you are at 0.25%, you are probably still lower than the neutral rate, and it's not. He should have said we are far below the neutral rate, or we are just below the neutral rate, which other central banks saying that we will move gradually towards neutral rate, but they don't say anywhere where it is. And he leaves the door open to the possibility they are really not far away from the neutral rate, and that I think killed it at the end of his press conference. And I've been saying on the shows there is a risk that the yen is the loser of this whole central bank fest, and it is seemingly going that way. We are on the high in the dollar yen. We are on the high in most of the yen crosses. Sterling yen had also a massive rally. It is really, to me, I don't think he done a great service there to the yen. Now, is he already bending a little bit towards political pressure next week, the LDP? I don't know. There may be several reasons, but at least he did not do a service to the yen at all during this press conference. Albeit he's keeping the rate path open to more hikes, but that doesn't tell me that they are going to go big, and perhaps not for as long as I would have thought.
Could there be something lost in translation? Could he have been talking about 10-year yield rates being up near 1% is near a more neutral level? I don't know. I'm just clutching here.
Yeah.
It is very strange to
there is always that possibility, when you translate Japanese into English, because they have a specific way of talking. But even so, if you then think that Japanese yields, if you look at the 10-year, are going to top at 1%, we know that if it goes above, the Japanese whales will get interested in repatriating cash and going back into more JGBs, because the 20 and the 30-year are well above. But he seemed that is not even playing their game. He should really have not said, unless they will take it back in some way or form. That I think was a mistake, and because that tells us that if we read it as it came out, that we don't have much more to go.
Yeah. Okay, thanks, mate. Right, in other news over in Japan, Toyota and Honda are apparently going to increase capex and R&D spending to record levels as they go running into the EV side of things a bit heavier. They're going to boost total investment by 20% this fiscal year. The reason that's a bit strange is because a lot of other auto companies, particularly those in the US, are seemingly moving a bit further away or slowing down on the EV side of things because sales haven't been all that great compared to how much money they've invested in it. So there's been a bit of a slowdown in what they're doing on the EV side. So to have these two increasing it now, obviously, you know, geography, it plays a big part. There may be a big EV boom happening in Japan. I don't know. Obviously, you've got to also remember that these companies do have overseas plants as well. So they will be impacted from a slowdown in those other countries like the US. But they're putting a lot of money on the line to get into it. And if it is more domestically led and there's a big market there, then that should help with the economics side of things over there as well. Over in Europe, ECB's Pancetta, Mr. Han, as we call him, says interest rate reduction by the ECB could accelerate in the next months. And then De Guindos came out with an absolute gem of a comment saying, in December, we will have more information than in October. No shit, Sherlock. Inflation data for September will look very positive. So he's prompting an upside surprise for inflation. Well, it's not a surprise now because he's given the game away, it seems. And just so you know, when De Guindos was Spanish economic minister, he used to come out ahead of a lot of data to tip the nod as to which way that data will be going. So if he's saying that the inflation data is looking positive, very positive, then you can probably take that to the bank. Bank of England yesterday left rates on hold at 5% as expected. The vote was a little bit of a hawkish surprise at 8-1. That was probably the top end of expectations. Well, it couldn't go any other higher because there's only 9 people. So 8-1 was the highest. Dingra, as always, voting for a cut, but it just shows that we are a bit further away from the next cut than anyone might have been thinking. In the statement, they noted that their staff model suggests underlying unemployment has increased steadily over the past quarters in contrast to official data. We know that official data is a load of old hogwash because they're still fucking around trying to work out how to count numbers at the ONS. The statement said we need to be careful not to cut rates too fast or by too much. And it's unlikely QT has made a material difference to the appropriate path for the bank rate over the past year. Now, it wasn't a press conference meeting, so we had to put up with Bailey popping up on the Newswires later. He said he's optimistic that UK rates will fall further, but more evidence is needed. We need to see residual inflation pressures disappear. It's imperative that the UK improves its current potential growth of 1.2 to 1.3%. And he's very relaxed that the government will take the right decision on the treatment of QT in its fiscal rules. Although it doesn't affect BOE policies. That's a nod to the new government and the upcoming budget. So overall, a bit of a undovish set of comments from Bailey and from the BOE. Markets have reduced expectations for a rate cut. We were pretty much pricing in 100% probability of a rate cut in November. Now that's went down to 66% yesterday. We also had BOE's man out this morning saying that she contemplated voting for a rate cut in August. Long story short, she thought that pressures were too high to vote then. She said it's better to remain restrictive for longer and we can cut aggressively later once the inflation risk is contained. She has a guarded view on starting a cutting cycle. She was a bit all over the shop as well with her comments in the speech that she had. And as our Rumi James noted, she came out with a comment suggesting that the consumer had been weakening. And those comments came out mere hours after retail sales jumped to 1% on the headline number. So we got good data out from the UK for retail sales. Year-on-year retail sales up 2.5%, healthy number there. So even the numbers, fuel, came in at 1.1% on the month, beating the 0.5 estimation. So good sales there from the UK, keeping the pound on the front foot for now. Kay, your thoughts about the BOE?
Undovish is the word, right? And yeah, it was a little more undovish than I would have expected. They didn't really nail the next month or the next meeting rate cut. But yeah, not a lot more to say about it. The current market is still. I think there's a good bit of rate differential in there. Like for instance, if you look at the sterling is a definite high yielder now in the majors market. But okay, looking ahead, and I know I'm very early on with that, but looking ahead, there is the possibility that they do have the budget already in mind, and they may be ready to go with a big one if it's needed in November. So the keep your powder dry meeting, this meeting, this is kind of how I read the whole story.
Yeah, no, I agree with that. You know, we suspected before the meeting they might give it a can kick for the budget. So yeah, that's definitely. We've got 2 meetings now, and yeah, I mean, it has to be said. You know, I've said it all along. Inflation in the UK can be more sticky than in a lot of other countries. It's a reason why they had to take rates up and over 5%, and it's a reason why they may have to keep them higher than a lot of other central banks too. But if it's going to go, it will go quickly, and then they'll be forced to chase it as usual.
Yeah, but the risk is, Ryan, that all of a sudden we get a catch up on inflation the next print, and then they may be forced to do a 50 if we get another month of let's say flat growth, and you add it to a lower inflation print next month. That may all of a sudden change the picture for sterling, right?
Yeah, no, very much so, and yeah, we've still potentially got a bit of a fallout in wages after all these fresh pay deals were awarded, and another lot of train drivers got a pay award as well this week, who were threatening to strike. So those wage pressures are still there or thereabouts, and the energy price cap's going to be going up. Already going to be going up from October, and no doubt it'll be going up again. So there's still plenty of inflation worries for the BOE in particular. So yeah, it may still be a sticky time ahead yet, but as we said, if it does, the numbers do fall out of bed, growth, inflation, then yeah, we'll be talking 50s, and they'll be playing a bit of catch up as well. Right, moving on. Right, on the back of a 50 basis point cut from the Fed, initial jobless claims came out with some 25 pip cut data. Improvement on the number. It came down. Jobless claims fell to 219,000, quite low for some time, but still in the 200s. Jobless claims coming down as well, so that poo-poos power further, and it's 50. Also, the Philly Fed manufacturing index, right on the back of the Empire State improvement. We got a good one from the Philly Fed as well, turning around a -7 loss to a +1.7. Doesn't look like a big number, but that's still quite a turnaround. Was expected to stay negative. Business conditions improving, capex more than doubling, employment showing a strong lift as well. The only downside was new orders, which came a little bit soft. Even prices paid went up, so a bit of inflationary pressure there. So, Kay, as soon as he cuts a 50, we still get better data. What's going on?
Yep, exactly. And data are going to be a driver, as we know. So we need to keep a close eye on those The market looks to ignore it, but the thing is that double-edged sword, yeah? I mean, good data could be supportive for equity markets. Correlation algos will take it as a little bit negative for the dollar as well. But yeah, I'm going to tell you, I mean, apart from gold and my silver, but those are like more trading instruments than really trading the dollar. I'm not really a big fan of being too short dollars at these levels, I must say, because there could be a bit of a snapback coming. That is what I'm thinking anyway.
Yeah, very much so. We had existing home sales, which were a little softer, but no great shakes from that. We're not seeing these numbers again been a bit up and down, but largely going sideways, so nothing really to take from those. Citigroup, they're juggling their Fed balls in the air. They now expect the Fed to cut by 25 pips in December versus their prior forecast of a 50 pip rate cut. Cut rates by 25 in December versus a prior 50 cut forecast. But they still maintain their forecast of 125 pips of rate cuts in 2024. So it's basically they shifted their 50 to November because we've had 150. They expect another 50. That leaves them 25. So they've got to squeeze a 25 in somewhere. So they see 25 now in December, which by rights means they see a 50 in November, which I still think is probably opposite what a lot of people are going thinking about now for the Fed. More people thinking it's the 25 in November. And as expected, we've had the reaction from Hezbollah and Iran saying that they will retaliate against Israel for the recent pager electronic device attacks going on. So just to keep that in your back of your mind, being a Friday, keep an eye on your risk trades going into a weekend. You never know what may happen. So we're in that zone again for geopolitical risk over a weekend. Right, Kate, anything else for anything else?
No, mate, go ahead. Let's look at what else is moving and shaking.
Yeah, what's moving and shaking? Well, cable's off and running. Where are we going from here? For me, I like, you know me, I like taking a long-term view. I like a nice clean chart like dollar yen and euro dollar. I like a nice clean chart just to pick out the bigger levels. Cable, though, is a bit of a mess when trying to pick out the bigger levels. There's just been so much action going on in and around these small areas that the big levels are quite few and far between, or quite wide away. So above this 133, yeah, there's a few points. Probably 134s. It's probably mainly going to play that game as it usually does, the big figures, double O's and the 50s. But if we are having a decent break here, then we could have a push on towards 135, 136 at the least if it continues this way. So short term, I know people will have trend lines going up here and there and extensions or whatever. But for me, trying to take a clean picture, as I say, probably 135s, 136s is the next big areas we need to look at. Obviously, then if we start looking towards the 140s, that's a different kettle of fish altogether. But for now, the pound is still in favour. Where it is looking equally a bit messy is in euro sterling. Let's zoom that in a bit because we're still messing around down here. As Kay says, a lot of grey hairs if you're trading this one. So we've had a little look down at the lows. Okay, so we pretty much matched these lows and it's holding for now, but it does look like it wants to head lower. The picture changed slightly because this is a bit of a slow burner. So if we get a break, rather than being it volatile, it might just dribble on through and take forever to keep going down. I'm got little interest in trying longs at the moment, as I have been. I think unless we get a move back above 84 and we start to see 84 becoming support again, I won't think about longs until I see that sort of price action. Same with the downside. If we are going to see a break of 83s and it's not going to be a fast one, then I think there's still an opportunity to maybe go for a short if we get a retest of this low, more so the 84, and it holds. If I see that, then I might think about nudging into some shorts, but I'm less inclined to trade it either way at this level right now. People like Kay, who are short it, and any of the other chaps in our room who are short, they got the luxury, if they're short higher up, just to sit and wait and see what happens. What do you make of this one, Kay? Is it going to go? Is it not going to go?
That's exactly it, Ryan. But I, as I said, I am in my mind slowly starting to get to more neutral sterling as a while, but in the meantime, I still don't like euro. But I think, as you say, like if this is really like a slow burner, it could just drift, and we need to be extremely patient. But I do think that if there is the closer we get to October, and again, I'm going to front run potential change of mind. We are going to have to be a little more careful about sterling exceptionalism between brackets or so. I still like sterling right now, and the today market likes it too. So I think we can especially on euro sterling or some other sterling process like perhaps sterling yen also continue sterling Swiss as well, continue to go. But yeah, I mean this euro sterling is probably going to be a slow slide. If it has to continue, then a quick drop and get down to 82 3/4 or also relatively quickly. It's still the way it goes, and but I'm going to be very cautious. So even in the short term, I think if we take 84 back, 84, 84.05, the market may think, oh, this is another failure at the lows, and we may get back up to not too far because there's no real reason right now, but perhaps 84, 40, 50 again, and there we can try it again for the next leg. So far, it's still in a range, right? So
yeah,
this is still rangy, although we hang towards the low of the range. And if you look at other stuff that was hanging towards tops and bottoms of ranges, finally it does go. So yeah, it's still positive sterling versus euro, I would say. And then on the rest of the currencies, yeah, I'd also say versus stuff like the yen. Dollar, I'm a little less. I find, okay, we had this run up again, but we stopped at a little bit of intra real move or target level, and I'm also looking at other dollars. Now that we have the Fed behind us, now that we saw whether, and I still think the claims, yes, the retail market especially, everybody's looking at those claims, but I don't think that they show anything dramatic right now. The Philly Fed is not your major data point, but it doesn't show anything dramatic right now. Do we really need to sell more dollars? That's my question right now. So I'm not going to be running blindly into long cable positions right now. If we talk about still about the sterling and globally dollars, I'm not finding it very useful to be very short dollars right now. And again, I'm saying I'm still long gold and silver, but those are different trades, completely different trades. I've actually bought some dollar rand as well, which I'm not going to say is a hedge, but it could actually become a hedge. One short dollar versus another long dollar position.
Yeah, cool. Well, just before we move on, I just wanted to just add back to the conversation. This one, you can't deny that for the last 2 years odd, it's in a downtrend. Okay, so if you want a perfect technical picture, what happens here is that we bounce from here up to the zone 85s. We bounce up to 85s, hold that zone. That'll add to this pattern, these lower highs, lower lows, and then if you get a move and hold there, that would be something I would look to short then for a break further down. But obviously, for those who are short, I hope that it breaks now and keeps on going. But if this level does hold and we bounce, I think the next time we come down here, we go through it, because it will be too often we're coming down to this level, and that's when we move through. But for the rest of your dollar UK, yeah, I mean, we said we're going to probably need some time after the FOMC just to see how the market's going to settle. Obviously, dollar yen's out on its own, universe as always. But even that is running into trouble. For most of September, we've had resistance up in the high 143s into 144. And here we are again after the Fed, after the Bank of Japan, after some data. And we're up here again. What we have done and what it's looking like we're doing is we have stopped falling for now. We're seeing some old levels on the way down, messed around, but now we're just seeing them become support again. We had this move down here where we hit a low, new low, held the prior low, got the bounce. Then we've had a test back down there. So we are building a bit more of a support picture than perhaps we had been doing over the last several weeks. So yeah, maybe now the Fed has finally given us the rate cut cycle start. Maybe the dollar is at risk of at least stabilizing. Don't know about shooting higher, but as I say, dollar yen's still a bit out on its own. Dollar CAD is another good example. I know you're tinkering in this one, Ali. Again, we've come through the Fed, we've come through everything, and we still sitting down here. We hit the decent level, 136.50. I thought that might be a bit too close to the price over the FOMC, but that's where it stopped. So now we're lower, but it doesn't look like it really wants to sell off a big chunk. So it's all, I think, it's one of these things where a lot of stuff might be running out of puff a bit. Aussie dollar tried the break, couldn't cement it. Now we're back below again. Is this a time when you have to think, okay, longs, anyone who's longs in this last bit, if they start folding, we're going to see a pullback in some of these pairs.
Yeah, and you see it on the Aussie, you see it on the cable, you saw it somewhere on the dollar CAD as well. We saw it. We were talking about that dollar yen in the room. We start to see it under 142 in the dollar yen as well. There's stuff now where the market may be thinking that short dollars may be looking at taking a bit of profit. But what I'm especially going to be monitoring is the start of next week. Yeah, stuff getting tired. Okay, Gavin says yes, it is getting tired, but on the other hand, we could also just be building a pause. If you look at a bit of stuff, we are coming off highs in cable, highs in Aussie. Aussie is interesting because it tried twice there, above 68 and a quarter, 68.30, and it looks a bit tired up there as well. But I think next week will be the week where we are going to see it, because we are going to be over this whole central bank thing. The asset managers and big flow providers will have digested. Their models will have probably crunched everything, and perhaps next week we are going to see real moves develop. And so we need to watch out. Today, I'm not even sure. Oh yeah, we have like the retail sales in Canada, but apart from that, there's nothing anymore on the calendar, right?
Yeah.
We don't have any US data, so it is. Yeah, I would say that we may be in a bit of a holding pattern today. One thing, and we never know which way that's going before. I mean, people speculate. It's a triple or quadruple witching today. So
the witches are out.
all the witches are dancing today, so be careful, because this market can go anywhere. And FX, if there's nothing else going on in FX, those correlation algos will drive FX together with equity markets and stuff. So yeah, be a bit careful about what's going on today in the US market. But are we going to start a fresh trends today? I doubt it. But next week, I can imagine that we especially those people who have the heavy flows to do, may come out of the woodwork and show us where they want to go. I'm just going to reply to Ali. Do you want me to show this gold,
I
Ryan?
was going to say if you want to take it, and
Yeah,
I was going to say,
just a quickie.
yeah, I was going to say to Ali, well done for getting your euro sterling.
Yeah, euro sterling, nice
Yeah.
one.
Right,
Okay.
all yours, mate.
Yeah. Okay. This is the longer term one, and thanks to Gav for coming up with this, because if you see the big correction that we saw, 2011, this European crisis, and then coming back, if we've got a pretty decent extension, which could lead us in the more longer term up to 2800, and there's also an extension going on up there for the setback that we saw from 2020 down and to the lows in 2022 when we started to ramp higher again. So there's, for the longer term, if you want to keep the longer term in mind, 2800 may be a target for gold. It may seem far away, but we are coming from 1600, and we are at 2600. So 2800 is proverbially speaking around the corner. So the box on top of the box, we are breaking above 20. Well, we tried over the numbers, but really the top of the box was perhaps rather around here also. 20, 25, 94, 95. So this should be, if we get a look back down below 2600, this should be a bit of a support here, 25, 92, 90, 94. Annie, I find your ratio between stop loss and take profit is not great. If you look for where are you? If you buy at 2604 and you put a stop loss $15 below, I understand, because it can move. That is okay. But why would you already take profit at 2612, which we traded actually, by the way? I see a high of 12 and a half, 1260. Okay, to me, the next level is 2616, but the real next zone is 26 50 60 if we hold, of course, 25 92 94. Break back below 25 90. I agree with the stop. It may mean that this will be looking a little bit failure-y, and we might get back down, but I still think the longer term trend is intact, and we go higher. But yeah, the risk there at 25 90 95 is clear. Okay, yeah, I see what you're saying. But anyway, I find your risk reward ratio a bit low on that one, but each and everyone does what pleases themselves. Okay, dollar yen. So as I said, the yen is at risk of being the loser of this central bank round, and this is showing again. We traded below 142, 141.90, and straight away shot up again. We are at a bit of resistance here, I'd say. People are looking at an inverse head and shoulder, but to me that's broken here, right? If you look at the shoulder line, that's broken in here already. But yeah, some are looking at it horizontally, or I don't know what people are looking at sometimes. But yeah, to me the resistance is here. If it goes this afternoon, which I really don't rule out in this round, is having a look at 140, 144, 50, 60, 145, 10. I think it's a real possibility today if the dollar is the driver. Okay, again, it could be that is just like yen crosses, because if you look at sterling yen, for instance, that has broken yesterday above 188, and we didn't even retest it over the Bank of Japan. We are just trading higher right now, and I said we could trade at 190.80. We're already through onto the next level, 190, 120. I'm not ruling out even a little bit more of yen weakness on some of those crosses, because if you look at stuff like where's my Aussie yen, we are trying 97.70, 97.40, 70. We are trying to get above. this could lead us up into mid to high 98s as well before this round is over. That is all within the possibilities, because I don't think that Ueda gave enough to the yen bulls to specifically today keep on buying the yen. That's what I think. No, I don't. I'm just reading what Ali says. Like no, a one against two, a 1 against 2 stop take profit against a stop loss is in no trading book wherever a good ratio, I should say. But I
Yeah,
mean,
I just want to add, I don't think I would have ever said that was a good risk
no,
reward ratio. 14 loss to 8 profit.
I don't
You
think
went the other
so.
way around, mate.
Yeah, that's what Gavin says. Okay, rent, because we had the SARB yesterday as well. They cut 25 as expected. The funny central banker was trying to explain all the reasons why they could have had 0, why they could have done 25, why they could have done 50. All very, very confusing. Fact is that we held. And if you look at the gold, for instance, Rand, South Africa is a gold producer, but it decoupled yesterday. And I think that's relatively interesting. So I decided to give it a small go long. I'll be monitoring whatever happens around 1759, 1761 today. We are on the approach. If we get above, I think there's a fair possibility that we have seen yet again the low, which technicians would call a double bottom, I think, and we could have a little run higher. Confirmation through 1770 would be great, because that would mean that we're probably going to creep back up to 1800. So that's the one I'm also in. It's not really a hedge, right? Gold against dollar rand, but it does it does help me as well that to reduce a bit of my dollar outstandings, because I'm not a huge fan of being dollar short as such. But I think that if gold corrects a bit lower, dollar rand will shoot higher, and then it could become a real or a better hedge for that position. And with that today, Ryan, I give it back to you, mate. We are exhausted. It's been a long week, a very active week, hectic week. I hope everybody was okay, by the way, this week on their trading side.
Yeah, very much. I hope there weren't any horror stories. And you know, if you are finding markets tough, you know, we're here to help. You can come and take advantage of our sale, of course, and join the ForexAnalytix platform, more so because of the community and what we can do for you in there. Don't forget, we have the trader coaching courses as well, of which me and K-Man do regularly. So you can get some one-on-one time with us or anyone else in the ForexAnalytix universe. So don't forget, we are here and we do have the tools to help you get through it, all different ones. So, you know, take advantage of that. If you have been struggling, you know, we're here for you. Anyway, thank you very much as always, Kay, and thank you very much to you guys for coming and supporting us here at the Flow Show. Do have a good, safe and peaceful weekend. This weekend, recharge, and we go again on Monday. Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.